What's going on, everybody? FNS from the Unusual Whales team here. This VOD is taken from the live Twitch stream on March 10th, 2022 with Unusual Whales partner Mr.InvestrTrades breaking down how he uses the flow to trade every day. Links to Mr.Investr's social media and his YouTube channel are in the description below. Check him out. But for now, strap in, grab a pen and paper, and enjoy the video. First of all, thanks for coming on. Really glad to have you here. This has been a long time coming. We've been fighting with Stonerman's idiot internet. And now it's good to go. We can have partners. And who better to start with than Mr.InvestrTrades?
Awesome. Let's get to it. All right, guys. So I hope you got your notepads out. There's going to be lots of info coming at you today. We're going to start with pretty much the screen layout. And then we're going to get into how I have things kind of panned out. I have multiple tabs opened, one of them being the opening orders tab. The other one's a live flow, and one more section where I have, just the alerts coming in. We'll get through all the settings that I use. We'll get through what I look for in those, and essentially how I kind of come up with what I want to trade. All right, that's going to be vital for a lot of you guys. So, everybody wants to know, how did you come up with this? Why is this on your watch list? How did you come up with that level? And I'm going to tell you guys how I do that, plus how I'm going to team it up with giving me that confirmation on the flow. For those of you guys that know me, I love patterns. I trade technicals. I really focus on that. And that's kind of been my bread and butter for the last, 3-4 years. We're going to get right into it. This is one of the main screens that I have. Obviously, I have 3 other monitors, but this is one of them. The other 2 are just filled with charts, so nothing really to show you there, other than there's one more screen that has kind of the social media aspect there and my main active window that I'm actually trading off of. But let's talk about this window and how I kind of put everything together for Unusual Whales and so forth. So I put this on just to kind of cover that right there, so I'm going to get rid of that. And what you're going to see here is the Unusual Whales, pretty much tabs that I have built. All right, so let's get right into it. I usually have these 4 charts here, and these 4 charts consist of my top 4 tickers that I'm looking to trade. And I will get to how to come up with, what stocks to trade. But this is the layout that I have. I have 4 stocks, usually on 2-minute time frames, and I'm just looking for intraday patterns at this point. The flow here that I have 2 tabs. All right. The first tab is called my opening orders tab. All right. So I'll pull this down here so you guys can see it. And let's get to the filters. All right. So if you guys don't know, obviously Unusual Whales has this great feature where you can actually build custom filters, right? Or custom settings for your flow page. So I've built one called opening orders 20K that are out of the money. Okay. Now that's what I have right here. That's the settings that's opened up for me right now. And why am I looking for that? I'm simply looking for that because I want to see orders that are greater than $20,000 in premium. And I'm looking for something that is not rarely, but mostly out of the money. And why I want out of the money is simply because I want to see where they're buying it and how far out of the money they're buying it to. I want to see that they're putting their money and they're expecting a directional move towards that out of the money strike that they're choosing, right? So our first setting here is premiums above 20K. I don't adjust bid and ask. I rarely actually do mess with this because it puts a bias in what you actually see here, okay? So I don't really mess with that too much. I leave that as it is, okay? So I come down here. I simply have opening trades ticked off. I turn that on. You can see with this padlock feature that's there, that little icon, and I have out of the money. That's it. There's really nothing else to it when it comes for the opening orders out of the money. All right. Now, what happens here? I obviously minimize this so I can see the whole thing. I can see the symbols and everything. But I spontaneously throughout the day, I'm taking a look at this tab and seeing what's going on. All right, so for example, here we have Amazon 2960 calls. They're going after the April 1st, right? That's 1 million value in call. It's 22 days expiry. And if we take a look at Amazon here, 2960, they're going after, what time did this come in at? At 3:45, All right, so right before close, they bought these 2960 calls, telling us what? This is an out of the money contract that they bought. They're telling us that they're expecting a directional move upwards, essentially, right? And they're putting their money where their mouth is. They're buying $1 million in contract. So that's something that I would pay attention to. It's an opening order. They just opened that position. And I just spontaneously take a look at this and see what's going on. Here's another one that came in at 1556, right? 2980, again, April 1st, 22 days till expiry, going after the 1980, right? This one's 413K. So these are the little things that I pay attention to on the openings orders tab. So I kind of keep this here and look at this and make note of them throughout the day, okay? But when I'm day trading, I'm actually putting more weight on the next tab I'm going to talk about, and that is the pretty much my day trading tab. And I'll get into that again here. So the watch list here that I have, I've built 20K broad. By broad, what does that mean? That means that I'm really just looking for premiums that are above 20K. I'm not trying to filter anything else. Oftentimes, maybe I'll go in and I'll change the date till expiry. Let's say if we're trading Lotto Friday, maybe I'll change it to 7 days just to see what more close expiries they're going after. But most often I leave it at 20K and nothing else is ticked off here. And I'll explain why that is. Okay, I really just want to see where these orders are coming from and how hard they're hitting the options chain, right? And as you're taking a look at this throughout the day, what I want you to do, this thing is going to move very quickly, but what I want you to do is focus on the orders that are coming in, for example, on the SPY at key areas of support, or for the ticker that you're looking at key areas of support, all right? You can always filter out certain tickers if you're not interested, but what I'm really focusing on is what the market is doing at certain levels. Am I seeing a lot of bullish activity coming in when we're hitting that support level? Am I seeing a lot of bearish activity coming in when we're coming into this resistance level? Okay, so for this filter, there's really nothing there, and it's just simply 20K broad. Right now, obviously, sometimes when I want to check a certain ticker, I'll go in and, for example, I'll put in Amazon, right? And Amazon will it'll filter and tell me that, but that's if I'm looking for a specific ticker that I'm looking to trade. Again, I put that up there and I wait to see what it's going to do, if it's going to come into that support area at, for example, the 2900, right? That's kind of the filters that I have, and these are the two tabs that I have open, and you can always save these. If you guys aren't familiar with how to save them, you go in, you put in whatever you want here, and all you have to do is press save, and it'll save it as a custom preset that you can go to. Okay, that is these two tabs. All right, and I'll go into more detail about how to kind of use everything as well. The next tab that I have open is the alerts tab. All right, there's really nothing I do on this side. I just want to know what big orders are coming in and how far they are from the actual strike price, right? Are they out of the money? Again, I'm really looking for out of the money stuff. I need to see out of the money simply because I want to see a sense of direction. I want them to tell me they're chasing or they're going after a strike or a price that has not yet been reached. So if we're looking at Amazon at around 2,900, I'm looking for calls that are north of 2,900 and they're trying to get, to 2,980 or 3K. I'm not interested in anything in the money because those can be hedge plays, and I don't want to try to play the guessing game on see, what they did, why they're doing it. Things are moving so fast when the market is trading that I'm not interested to dig in deep enough to understand why this person bought a, in the money call and what their game plan really is. A couple of things I'm paying attention to is I want these to be north of 500K. All right, so the total premium spent, I want it north of 500,000. Okay, the expiry to me, if it's within the next 3 months, great. That's what I'm interested in. Again, 30, 60, 90 days is what I'm looking for. All right, so if we ticked off this 500K, great. If we ticked off this, within the next 3 months, great. Now, if you don't know what the price of the actual stock is, you can look at the percentage differential, all right? And that's going to tell you how far away this strike is in relation to the actual stock price. So that's always what I keep in mind. I don't want anything too far, and I don't want anything that's, too deep in the money. Again, I simply look for stuff that are out of the money, that's going to give me a sense of direction, that's going to show me or hint to me that they're looking for a directional move one way or the other. And I always pull things up on the chart, and we'll talk about that. I don't simply just base a decision on what's going on here. I pull up the chart to really decide what's happening with that chart on the daily, on the intraday level, then I make a decision on it, right? So that is the live alerts tab. Again, there's really no filters that I have here. I want to see everything, and you just click on alerts here and you have everything right here. Now, a lot of people would ask me, hey, why don't you filter things? Why don't you want to filter things? I think of it as this. You have a sea of opportunity, and if you take, a magnifying glass and you zoom in too close into one aspect of something, you're missing everything else that's going on around you, right? I want to see what's happening at all times, and I want to be aware of what's going on at all times. I don't want to take a magnifying glass and zoom in too much and miss a lot of the things that are really going on around me. That's essentially, you're giving yourself tunnel vision at that point. You want to have the ability to kind of see everything and give yourself the ability to make decisions based on what you're seeing. And if you zoom in too much, you're not going to be able to see everything as it comes. All right. Now, some of you also have told me before, if I don't put any filters on, I'm going to get a lot of, SPX or a lot of Tesla. So in that regards, all you got to do is press minus TSLA, and essentially they'll eliminate everything that has Tesla on it, or you can just press minus SPX, and it will eliminate everything that has SPX. But again, I like to see SPX simply because I want to see what the market is kind of doing. But with specific tickers, you can go minus Tesla, so forth. All right. So with that said, let's get into how we're going to actually find things to trade. And finding things to trade is there's two ways to do it. You're going to have to put in legwork. And putting in legwork simply means having a scanner system, or using Unusual Whales itself to kind of come up with it. And one way that we do that is, let's go to pull up the menu here. You can go to hot chains and tickers. You eliminate ETFs, right? And what I like to do here, there's a few ways you can go about it. Okay, you can actually look at the hot chains and see what's being played and what has the most volume, and you can pull it up. So let me pull up my other chart here. All right. So pull up this chart. When I'm looking for stocks to trade, I have usually a scanner system to the left, and I have a main chart that's usually a daily chart to kind of establish, what the chart's looking at, what patterns I'm looking to trade. And if everything sets up, then I kind of put it on a watch list for trading tomorrow. So for example, here, we have a lot of March 11th Apple calls being one of the hottest chains. You're seeing the 160 call, 157 call, 162 call, 160, 165. These are all in the March month, and they're all getting a lot of attention in the hot ticker section here. Okay, so I pulled up the daily chart on Apple, and I'm taking a look at what's going on here. This chart might be a little busy for you guys, so I'll clean it up a little bit. Actually, I can full screen like this. There we go. I think that's pretty good. All right.
ABN asks, what chart software is that?
This is Thinkorswim.
Beautiful. Thank you.
All right. So we saw a lot of bullish activity on the hot chains, and we're seeing that, every time Apple comes into this 200 moving average, it kind of bounces off, right? We came back close to it today, and we're putting in this essentially hammer here on the daily. All right. So hammers, if you guys know your candles, they're pretty bullish candles. This one is a red hammer, but still, if we can get back above this 160.40 level, we do have room to push at least to the prior day's high, which is sitting at around 163.48. All right, so this is what I would be looking at. And going into tomorrow, since I know there's a lot of bullish flow coming in, bullish activity coming in on Apple, and they're going after the 162.50, 157, 160. All these calls are on the hot chain section. I pulled up the chart and I saw that hammer coming off the 200. So what I'll be looking for tomorrow is if we break over this 160.38, 160.40, we do have room to kind of push back up to that 163.48, right? This is a fluid drop down, and we have our high of day today at 160.38. So we should be able to push right back up to that level, and that's something that I would pay attention to. right? Now, if we zoom out here, we can see that the most of this move from 163.48 till the open today at 160.38 happened in the pre-market. So what happens in the pre-market is usually on very lower volume. So if we pop back up here at this level, let's say we gap up a little bit and we hold under this level in the pre-market tomorrow morning, then you better bet I'm going to take this over as soon as this triggers over the 160.38 or 160.50. I'm going to take this trade to the upside and hopefully get this run into this little gap fill essentially that we're going to see back to that 163.48. All right. So that is how I kind of come up with what to trade. That was one example of it. Let's go keep going, see if we can find something else. We'll keep going down this list, see what other names kind of pop up here. So we're seeing Tesla kind of pop up a few times. Tesla 900, 840. We got Tesla again on a put side. We got Tesla again. Yeah, they're forever on this hot chain thing. So let's take a look at Tesla. So a very similar look with Tesla here. Again, a hammer coming off of that 800 psychological level. So we can see the 800 level here has been respected previously, right? At these areas right here. It was respected here again, respected again here. And we really broke it here, but bounced back up. And today we're bouncing off of that 800, 805 level again. All right. So this is another way that you can kind of come up with the stocks. You have a hammer here. This one, personally, simply because I have my 20 moving average above me. There isn't much range on this one for me to kind of get involved in it. Let's see, this is right here, and you have your 20 moving average at 857. If you were to trade this hammer off of the 855, you have too much resistance points on the upside. So this is probably something I wouldn't trade when it comes to finding stocks. You have to kind of do this process over and over again until you see something that has range in it. So for example, if we pop back into Apple, we can see that Apple actually has good range. If we get above this 160.38, we can actually take this trade up to here, which is about a 2% move. And for example, on Lotto Friday, that 2% move is going to pay you significantly nicely. Whereas if we go back to Tesla, we can see that there's too much resistance overhead. And if we get involved here, let's say we get involved at this 180, this 855 level, okay? This move right here is only a 0.3% move. It's not even a 1% move. So there's a possibility that we might reject and sell off like we have multiple times, once, twice, and possibly again if we open up tomorrow and reject that 20 moving average. So these are the little things that I'm paying attention to. Find a stock from the hot chains list and then make sure that it has a range. And if it checks off both the criterias, then you put it on your watch list for tomorrow. Okay, so that was looking at the hot chains section. Now, another thing that you want to kind of take a look at is, let me zoom this out, is the call premiums, all right, and how much percentage that is. I've talked about this very briefly before on one of my videos in more detail, but what I'm kind of looking at here is same thing. I want to see, how much volume actually came into it that day, how much percentage increase it is from average. So this one is, for example, 3,154. But this doesn't mean that we're going to trade this, right? This is a process that I'm showing you guys so you guys can come up with your watch list. So FINV, let's pull up FINV. So we have lots of call activity on that one. But, to me, there's really not much going on here. I don't really see a daily pattern on it. I don't see a daily flag here. Maybe if we, also it's a sub $5 stock, so I probably wouldn't touch it much. But I don't really see anything interesting on the daily that I would pay attention to that I would want to trade. All right, so I'll just skip to the next one and I'll kind of go down the list. All right, I'll go down the list until I see something that has good potential, that has a good daily pattern that I can kind of trade and see what it is. So let's try UAVS. It's another name that was very popular before. So this one's it's a $1 stock. But yeah, this one's not bad. You see this significant volume coming in, big hammer candle. You have this resistance area from this prior day, also confirming it again today at that 108 level. If this does push up over that 110, you could probably see a run to the 120, 50 moving average at 120. right? So pay attention to that maybe going into tomorrow. But what I'm usually looking for is stocks that are above at least $5-10. I don't really like trading sub $5 stocks. Right. So this isn't one way of doing it, but when you're looking at the tickers here on the left side, you're really going to have to do more digging to kind of understand what it is that you're going after. You have to kind of filter it a lot more manually here, or you got to pull up the chart and everything this way. All right. These right here are going to be the hottest change, which is going to be more catered to what we're looking for, especially if we're day trading, because it's giving us a lot of options that are expiring very soon as well, right? Very rarely you're going to see, on the hot change here, things that are dating 2 years out. They're the hot change. They're things that people are buying actively, and usually what's being bought very actively is expiries within the next at least 30 days that you're going to find here, which is suitable to what we're looking for when we're day trading, right? But another method that I have is I use FinViz, and I'm sure you guys have all used FinViz. You can research it. There's videos I have on there that filters on what to look for. But again, essentially, it all comes down to looking at the daily pattern and finding out a key level of area that you can kind of trade for breakouts and breakdowns, right? Let me give an example on RIVN. Perfect. So RIVN was one that, through the scans that I mentioned, I came across. And the reason why, we traded RIVN a while ago was, this 50 psychological number was a big number for it, right? We can see that it came down here, bounced, pushed up, and we essentially put in this rectangle. And this is what I want you guys to pay attention to. You guys have to understand these patterns. And once you find these patterns, you can come back, check the flow, and see what the overall flow is. And on this day back here, you're actually seeing a lot of bearish sentiment coming in on RIVN. So once that 50 broke, it actually sold off a little bit. And the next day when it retested that is when we got involved and took advantage of that move. That's a 12-point move in one day, right? So these are the things you kind of want to take advantage of. Understand, look at the charts, and don't just forget about them. Because if you're seeing a pattern forming, put it on your watch list. Continuously check the flow on it. And from here, by checking the flow, I'm going to explain to you guys what I look for when I'm checking the flow and the intraday analysis page. But before I get into that, let me stop for a second, see if there's any questions that people have. I know I've been going on for some time now.
Trucking. So ABN says, so do you look at the Greeks or just buy a direction when day trading?
No, so I do look at the Greeks, and it's based on a few things. Okay, so let's use that Apple again, for example. Let's take a look. We'll pull up this Apple chart. So let's say we want this 160.38. So tomorrow we want to wait for this 160.50 to break the buy calls. All right. So what I'm looking for here is, I'll pull up the option. This one might get a little bit fine for you guys that are watching, but what I'm looking for is, I'm asking myself two questions. Am I looking to day trade this, or am I looking to swing trade it? If I'm looking to swing trade something, obviously the daily pattern needs to be there. And, if the daily pattern is there, great. Then I'm looking to buy something at least with 2 months out. Why? Because theta is really going to chew me up if I buy something for next week. If I buy something for next week and this thing decides to kind of go sideways and not even stop me out, I'm going to get stopped out just on my premiums because my theta is going to chew away at my premiums. Right? So if it's a swing trade, I'm looking at least 2 months out. And if it's a day trade, I have a generic rule of that. If it's Monday to Thursday or Monday to Wednesday, I'm choosing same week expiry. And if it's Thursday, I'm choosing next week expiries. And on Fridays, I'm usually trading lottos. And if I don't want to trade lottos, I choose next week's expiry. Again, those are for day trades. I won't hold those positions overnight. And it's just simply, I'm getting in at a certain time of the day and I'm getting out if that pattern pans out and so forth. So the Greeks that I would be looking at to kind of finish up that question that you had, if I'm looking to day trade, I do look at the delta and I'm looking for something that is 0.45 to 0.55 delta. So a lot of people ask me, what strike are you choosing? Are you choosing it based on your target, or what are you looking at? I'm simply just based on where the stock is trading. I'm looking at the delta, and if it's anywhere from 0.45 to 0.55, I'll take the trade. Another thing that I look at is obviously how much OI it has. Am I going to have trouble getting out of that trade? And that's the main thing that I pay attention to. If the premiums are very cheap, and I want to buy, let's say, $5,000 worth of it, obviously I'm going to have a hard time getting in and out of that position if there's very little OI. If there's only like 300 in OI and I'm trying to buy at least 500 contracts, it's going to be an issue for me getting in and out of that. So it's something that I pay attention to, especially the OI and the volume for that day as well. So to kind of answer your question, delta is 0.45 to 0.55. Okay, so let's get rid of this here and let's get more into detail about how I use the intraday analysis and flow levels, right? So let's say I've done my search and I understand, I found a ticker that I'm looking to day trade or even swing trade. How do I kind of use the intraday analysis to kind of help me establish a sense of direction? I don't like to say bias because, obviously bias trading can affect you, but a sense of direction if a certain level breaks or so forth. All right. So first thing that I do is obviously I go back to the flow. And when I'm at the flow, I check the ticker that I'm looking at. I press reset to make sure everything is good where I want it. And I go to my presets, right? And I have one built for just ticker research, okay? And ticker research, this one is talking about at least 10,000 in premium and 90 days till expiry, something we already spoke about, and out of the money, right? Again, I'm looking for directional moves. So I would come in here, let's say I'm looking at Apple, for example. Apple's a little too flooded. Let's choose something else. Let's see, let's go to, let's look at QCOM, for example.
Ooh, QCOM's a good one.
All right, so I'm looking at QCOM here. A couple of things I pay attention to right away is the bullish premium and the bearish premium. So right away I see today there's a lot of bullish premium, at least 52%, and there was only 47 in bearish premium. All right, so again, I'm taking a look at this to kind of see what's going on. 10,000 going down to see how much data I'm getting. I usually keep this at 250, right? This way it gives me as much data possible. And I kind of go down here. If I'm seeing there's a lot of information here, I will usually click the ticker, pull it up on a new thing here, click intraday analysis, and it comes up with all the information for that ticker, right? For that actual ticker itself. And what I'm looking for here, I go to the flow levels, and this here gives me an idea of what's happening here. All right, so you can see everything over 1,000 is fairly bullish. When we're getting into the 5,000, it's a little bit 50-50. But after that 5,000, the 15,000, you're starting to get a little bit more bullish premiums coming in. Okay, and I also take a look at this little chart. Sorry, mine glitches out, so I have to do this. This little graph here. This graph is very important because it tells you what they're kind of going after. So let's pull up QCOM here. Again, pretty decent hammer, closing above that 200 moving average. So this is another one that I would pay attention to. Ideally, hammers, how you can trade hammers is if it gets above the prior day's high. So if tomorrow is Friday, for example, the prior day's high would be right here, and it has room to kind of push up at least 4 points here, right? So I'll be paying attention to this one. I'm trying to see what the flow is. They're pretty, 30,000 plus is bullish. We have, March 18th is actually the most bought premium here, and it's very bullish, and they're going after the 155s and the 200s, right? You see these two spikes in these graphs here. It's just telling us that these are getting the most volume, and just based on expiry, this expiry on March 18th, as well as this one right here on January 1st are getting attention, right? I'm interested in this one because it's higher than the other one, and also I'm interested in these little spikes here on the strikes telling me that they're actually going after those out of the money contracts as well. All right, currently we're sitting at 154.70, and we have 155 and 200 that they're kind of going after. So I'm going to be paying attention to that. We have bullish activity intraday. We have our flow that told us, today they were 52% bullish, almost 53% bullish, and we have a hammer off the 200 moving average here. That is another bullish thing to look at. So you have three things kind of leaning on your side on the bullish aspect, and simply just looking to kind of take this trigger off of that 155.40, 155.50 tomorrow, depending on how we open up, and take that ride at least to the next resistance area on the daily, which happens to be around 158.50. All right. So that is the intraday analysis page. and the flow and how I kind of use it. So that was a great example there. Apple is another great example. And this process takes time, guys. You know, a lot of people kind of want things just handed to them, and it's not like that. I spend usually when, you know, markets close, I, you know, get away from the monitors for maybe 10, 15, 20 minutes, and then I'm right back on the monitors. I'm using FinViz, I'm using Unusual Whales, hot chains and tickers. I'm going after, you know, the bullish premiums. I'm going after everything just to come up with, you know, a list of stocks that I can trade. And it doesn't end there. So once I do all this and I'm coming up with the list of tickers that I want to trade, you know, I have it written down. I have my ideas next to it. So for example, I'll make a list, right? So I'll say Apple. What did we talk about Apple? We had Apple, if we can get over the 160, 40, 160, 50, right? Look to buy calls, and it was on the hot chains and tickers. So the next one we came up with was QCOM. So QCOM, I'll put this all on a list here. And in the morning when I wake up, again, I'm waking up, you know, 2 to 3 hours before market opens, and I'm coming in and I'm simply just checking the pre-market levels, all right? Confirming my levels that I've come up with, seeing if they're actually going to be valid, right? You can see that, again, we moved from yesterday's high and we gapped down, we opened all the way down here. And this pre-market resistance level was respected right before close, before we sold off. So over that 155.35, we do have the opportunity to essentially fill yesterday's gap, at least from here down to this area. So if we break over that level, we should push up at least to this area right here. Okay. So these are the things that I'm looking at. I'll come check it in the morning, see where we are, 155.35. Are we going to be well above that? If we're well above that, then my list shrinks, right? Usually I have about, you know, 10 to 15 stocks that I have built on my watch list. And in the morning, that list usually shrinks to about maybe 7 or 8. And it's simply based on what levels I had that I was looking for at trigger. And did we break through that level? Is there more meat left for me to trade it? And so forth.
Roy Easy asks, are you jumping into the trade immediately after it crosses your level, or are you waiting for a retest?
Awesome. So a lot of people ask me this question, and the answer is I've simplified the answer, but you know, there's a lot of factors that go into it. So I'll explain what I mean by that. Let's say we have a trigger point. Okay, let's say we have 155.35 as our level to kind of trade and take that breakout trade. All right, we open up here. Oops, that's a little big. We open up here in the pre-market, and you know, I'm looking to take this trade, and this is where you need to pay attention. Okay, when do you actually buy it right at the trigger, or do you have to wait for some sort of a confirmation? So my answer to everybody with this, when they ask me, is what time is this trigger taking place? If it's happening within the first 5 to 10 minutes, most often, I mean almost always, I personally take the trigger right as it comes. If it's right within the first 5 minutes, I'm in as soon as that breaks out. Okay. If it's happening within the first 5, 10, 15 minutes, where there is lots of volatility and volume, why do I do that? Why do I risk the opportunity that, you know, this could roll over? Because if we get that strength and momentum come in, and I have my levels, and I've done this long enough to trust my levels and understand that when that volume and momentum come in, that push is going to move really quickly, and then you're going to get some choppy action consolidation. The easy move is going to take place right at the open at that trigger level. If you pay attention to a lot of the other tickers in the last, you know, few weeks or whatnot, you'll see that straight directional move happen as soon as the market opens. So again, if it's within the first 5 minutes, I'll take the trade, and I'll give you an example of that on plug today. So this was plug, all right, and I traded plug today, and my trigger level on this was 26.10, 26.11. Okay, when this popped up here, I took this trade right here at this level. All right, I took this trade right here at this level. As soon as I got in, I had my targets in mind, or my premiums. Let's see, what was it at? I think we got in at 81 cents. And I had my exits at around, I think it was 105, 106. Anyways, because of this strong momentum drive out of the open, I was out of the trade within the first 5-10 minutes. And this is exactly what I'm talking about. That volume and that momentum is going to come very quickly once that trigger breaks, because I understand once that trigger breaks, buyers and old short sellers are going to cover, buyers are going to step up, we're going to get that fluid move. All right. Again, this is because we're waiting for the morning volume to kind of take us there. Now, what happens if it's not within the first 5 minutes? Okay, or 5-10 minutes? I might chart go white. At that point, if the market is slowly dying down, let's say it's 10:30, 11, you know, most of the volume is pretty much gone out of the market by 11 o'clock. After 11:30, you're really just playing with algorithms and you know, computers at that point, and their sole purpose is to take your money from you, right? So what I usually like doing, if it's passed within the first 5, 10, 15 minutes, I like to wait for price action to kind of go break that level, come back and retest, and I'll look to enter on the retest right here and then continue higher. Why? Because we don't have that morning momentum anymore. You know, buyers are not just going to massively jump to their computers, take this entry, and bring enough volume to push us all the way higher, right? We're going to have people that are kind of day trading this. We're going to have not as much volume as we did within the first 5, 10, 15 minutes. So you need to wait for that breakout and retest to get involved, right? And the retest is probably going to be a better idea, because once this breakout happens, option premiums are going to jump up. And if you buy it up here, you risk the pullback, and you might actually get stopped out on this pullback prematurely before it actually continues moving higher. Okay. So if it's past the first hour mark, always look for that retest to get involved on those trigger levels.
Beautiful. And Investor, thank you for really going into detail there, because one thing that we see pumped a lot on FinTwit, especially on Twitter, is the concept of levels, and that you need to play levels, that you need to draw levels, you need to go on levels, but nobody says a damn thing about how to play them when they get tickled by the candles. And right there, you just explained how to play with the levels, not just to play them, but how you play them. So thank you.
No worries. Yeah, and I get that question quite a bit, because I mean, Twitter is filled with a lot of, you know, at this level, go long, right? But when do you do it? There's times where you do it. Let's say it happens an hour later into the day, and it happens, but there isn't enough volume, so the thing just falls right back down, right? So you really have to pay attention to, one, make sure that break actually fully happens, and then two, the retest happens and holds. Because oftentimes when there isn't enough volume, you'll kind of get this, and then it comes right back down and then just fizzles away, right?
Beautiful.
And that's what we really pay attention to after the first hour when volume dies down. What do you know about IPOF? IPOF? Damn, that was a back, I think, a while back.
I
Yeah, I mean,
remember it getting a lot of action last year.
yeah,
But I also think I
definitely.
remember it having 0 employees.
Yes. So here's one thing, guys. I mean, just take a look at this chart, right? Look at these wicks. Look at these wicks. Every pop is just getting sold into. Every pop is getting sold into. Every pop is getting sold into. These wicks are telling us that just by looking at this, there's a lot of bag holders on this chart, right? And it's not a clean chart. This is what I mean by no clean chart. There's lots of wicks, and the wicks are all happening on top of the candles. Where are the wicks at the bottom of these candles? Right? No one's coming in and dip buying this. Everyone is just selling at the top. Every time there's a pop, they're just selling into these pops. Again, I don't know much about IPOF. I haven't done their research on their financials to know if they're a good company or not. I'm just simply talking about these candlesticks here. And then, you know, let's take a look at I don't know. Let's see. Let's take a look at Roku, for example. Right? Take a look at. I know this is on a downtrend, but look at the candles. They're a lot cleaner. You have nice candles. You have good candles. Let's take a look at Apple. Obviously, you have nice candles, right? You have some wicks at the bottom. Let's take a look at Tesla. Right? The charts look a little messy, but the candles look better than when you're looking at IPOF. Just lots and lots of wicks almost every single day, right? You kind of want to stay away from trading these kind of tickers, especially if you're day trading them. There's a viewer that said, notably, the scan is at a time of risk off for the market, so whatever you see here is a bit off. Yeah. So again, I'm not focusing too much on, today's flow activity for tomorrow. I'm really looking at, the levels, what they're looking at. If someone's buying a $30,000 premium for, next week's expiry, that's telling me that there's some sort of bullish sentiment coming into the stock. I'm not solely relying on one sort of information to kind of tell me where things are going. I'm trying to gauge a directional sense in what's really going on that ticker for me to essentially trade again my levels, right? I established that once we get over, this is a hammer candle, it's bullish. We've closed above the 200. If we get above that 155.35 level, we do have opportunity to push. So I'm just using all the other information to kind of give me that confirmation and essentially that confidence to take that trade. Not really relying on any single information. As you saw, we're using flow, we're using charts, we're using candlestick patterns. We're using moving averages, support and resistance lines. Everything kind of then comes together to give you that confirmation to take the trade.
And one thing about like the really low cap stocks, the sub $5 stocks that can like do all that movement. I know this is a personal experience. We all learn from them. And actually, I'm just gonna go full Spidey on the stream quick. You can look me in the eye and I'll level with y'all. Here's what I did when I experienced literally that situation where I bought into something, it sold off like crazy, and I had a bad time. A decision I had to make, and this was with the ticker SOS, and I'm sure some of you in the chat remember that ticker. Fuck me. So I bought into SOS and I was up. I let a green position go red because I had bad position sizing and I bought into hype that was already dying down. The decision that I had to make after I was down, and this is on shares, mind you, I was down 45% on my shares, on SOS after that sell-off, after being up 60% because I got greedy. Now, what I had to decide was, do I truly believe in this company, its financials, the people running it, and its future? When I asked myself that question, the answer was no, I didn't, because I didn't, A, know enough about the company's financials because they didn't really post them anywhere, and B, I knew nothing about their management because they didn't post it anywhere. So the decision I had to make was, hey, what could I be doing with my current investment, even though it's down? What could I be doing with that money better than letting it sit there? And the answer was actively trading it myself, investing it elsewhere to recoup those losses. To me, it was better personally with that situation on SOS to sell it at a loss and put that money somewhere else so it could still work for me instead of risking it going farther down. I sold SOS at $2.75, I believe. Can you go ahead and pull up that SOS chart and show where it is now? Exactly. I made the right decision, I would say. So you kind of have to come down to, do I believe in this company? Is my investment worth it? Could I be using that investment for something else?
That's definitely it. I mean, a lot of people in the last year got caught in these. And I think, there's a lot of blaming that's going on social media and so forth. But ultimately, it comes down to, did you do your research to really understand, are you going to stick it through the dark times of these companies? And, sometimes like Stonerman said, at one point, you got to say, hey, is my money worth it still here? Or can I just take it and put it elsewhere? And I think he made a great decision cutting this because, look at where we are now, right?
Yeah, Cream says, LOL, buying that in the first place. You are absolutely right. It was dumb, and I held it through positive 60% all the way into the red, negative 45%. So another moral of that story is take your fucking profits.
Someone else asked about position sizing. I think that's an important thing to talk about. Position sizing, but position sizing is really based on your account size and your experience. I have a rule that I tell people with position sizing. If you're fairly new to the markets and you're coming in with $5,000, don't ask yourself how much money you want to make, but how much are you willing to lose per day? So if you're only okay with losing, $300 per day or $200 per day, give yourself at least 4 trades that day in order for you to get stopped out. So let's say your max loss for the day is 100. That means per trade you should be only be able to lose $25, right? And that kind of gives you how much dollar size you should put in per contract. So if you can only lose $25 and your stops are going to be about 20%, that's how you kind of establish what position sizing you should take. Position sizing is based always on your risk tolerance and how much money you can afford to lose and still be okay and walk away from the computers without being angry. So it varies differently from everyone, but with a small account, again, you always want to give yourself the opportunity to have skin in the game. And it's not so much about making money, but learning how to trade and how to come up with the emotions of trading. And that's one thing a lot of new traders fail to see is, the downside. We always have to manage the downside and not take big losses, because that's what's gonna kind of keep us in the game. I've always said this. It's easy to I mean, not so much now, but it was always a lot easier to make money in the market. And you can essentially make money for an entire week and lose it all within one day. And that's where drilling that risk management and getting out of the trade for a X amount of stop loss is key. And in this market condition, actually working on that is vital, and not over trading is key. On what basis do you typically set your stops for day and swing trading? So day trading, I usually have, once my trigger goes and I get involved in the trade, I usually have 20 to 30%. That's my max for that trade. And based on my position sizing, I know what that's going to be if I get stopped out, and I'm okay with losing that money. Every time I get into a trade, I have to be okay with losing my stop, and I part ways with that money before I enter the trade. So if I don't want to part ways with my money, I don't take the trade. And that's where a lot of people get into a bad emotional trading aspect, is they can't afford to lose the money, so they take the trade, and when it goes wrong, they're holding and holding and hoping for it to go back up, because they never accepted the initial loss to begin with. So I use 20 to 30%. Yeah, SPY. The reason why I keep if you guys tune in a little bit later, I have a tab just for full on very broad flow, and that's simply because trying to search flow on SPY at the end of the day to see what direction it could go tomorrow is a total disaster. That's why I like to keep it live. And when it comes to certain levels, I want to see, are there bearish activity coming in or is there bullish activity coming in? Then almost instantly I can make a decision based on what flow is pouring in for that second to see if we have a chance of bouncing at that support level or going lower. That's the only time I really look at SPY flow. To kind of look at it after the fact is a little weird, I think, in my opinion. There's just so much data on SPY. It's just enormous amount of data. But on the intraday level, when you're looking at the live flow, it could, and I've used it multiple times, that it's helped me choose a direction or pick a bottom just by using the SPY flow here. I think I had somebody here ask about, do you have any advice for someone who has absolutely zero knowledge? Yes, so I think he's talking about options. If you go on actually my Twitter page, there is an actual options crash course you can take a look at. I could plug it here if you want.
Yeah, go ahead.
I don't know if that's going to work, but that's an options course I put together. Very brief. There's a section 1 and section 2. Take a look at that. It explains about everything I just talked about here. What's a good rule for stopping out? If you're new and you're having a hard time stopping out, set hard stops. And that's the only way to disconnect your emotions from your mind, from your finger. That's really it. Once you put your hard stop out, by the time you go in and try to put your orders out, your hard stop will probably get initiated, and that's what you want. You have to disconnect that emotion from your fingers clicking the button to exit.
So you're not staring at it with that hope that it goes back up.
Exactly. And one of my biggest issues when I first started trading was I always said, no, I can't put hard stops. It's not fair. I get stopped out. Market makers fuck me. So, I mean, at the beginning, if I did that, I probably could have saved thousands of dollars. Because once that level breaks, chances are you're wrong anyways, and it's going to keep going down.
And also, one thing that I would recommend if your broker allows it is the concept of trailing stops, where you have multiple levels where you liquidate X part of your position. You can use that as a hard stop too, because I'll say with so much certainty that it literally happened to me last week and fucked me absolutely sideways, is depending on your broker, depending on the liquidity of that option chain, like how easy it is to transact it, depending on the volume of that day, stops can sometimes get skipped. Sometimes
Yep.
the stock will move so fast that no fills, no bids, no asks, nothing happens at your stop limit. And so that actually happened to me, and a green trade turned slightly red before coming back.
Yes, I definitely agree. Do you think they mess with the stop losses? I swear I get paid right out. um, you see, that the reason for that is because one, you could be putting your stops at a pretty obvious area. I mean, market makers are designed to make money in this market. So there's lots of times where we get those fake outs. You have to just give your trade a little bit of room. So if you're noticing you're getting stopped, first of all, what is your percentage of the stop? I know a lot of people use 10%, and 10% in options is just absolutely ridiculous. 10% can go up and down every 10 seconds in an underlying in options. So that's something to understand. How big, how wide are your stops? Are you giving your stops room to kind of move and mature? So you have to kind of establish that as well. But usually, if you're getting too stopped out too often, you're seeing that happen, size down and increase your percentage. So give yourself maybe 25 to 30%, right? But don't keep the same size, because we're increasing our stop loss, which means we're going to have a bigger loss, which in return means you have to use a smaller position. But that will essentially give you more room or more flex room in the stock for it to play out. Even if it's going to kind of pop back up and they're going to stop out some people, you'll still have the opportunity to stay within the trade. Considering the market conditions right now, isn't it better to look for puts rather than calls? Again, it's based on levels for me. There's really not much. I'm not gonna try to buy puts all day long. I'm simply just trading a certain level, right? If that level pans out, then yeah, great. I'll trade it to the upside or the downside. If I have a bullish pattern, then I'll trade that to the upside. We have a little cup and handle here on the SPY that breaks out. We were going back over that, sorry, Qs. Then I'm buying calls, right? This is a bullish pattern. It's a cup and handle. I'll buy calls and take advantage of the move up. We have a little bit of a double top here. If that breaks, I'm most likely going to buy puts. It's just a matter of patterns and levels for me, and not so much what I think will happen. Do you use trigger order from TOS? Where do you set your take profit and stop loss? TOS is horrible fills. How do you manage it? Yes. So with TOS, it could become an issue trying to get fills, especially when you're looking at widespread options. Okay, that's why I try to focus on stocks that have tighter spreads. And I'm not just putting in market orders. I very rarely do that. I look at where the bid is and I look at where the ask is. Okay, so usually I have active trader open like this, and it'll tell me my bids are right. Sorry, my bids are right here and my ask is right here. If this spread is not too significantly big, and by that I mean at least within 2 to 3%, maybe sometimes 4 or 5%, I'll try to get filled above the ask, right in the middle sometimes, and that'll often do the trick if the spread's nice and tight. So I don't sit at the bid, because think about it this way: if there's already X many contracts sitting at the bid, what are the chances that you're going to get filled before anybody else, right? It's not a matter of this broker is going to get me a fill, that broker is going to get me a fill. If you join the bid, you're waiting in line to get filled. So I usually put it a little bit above or closer to the mid price, and I put my orders out, and I usually don't have a problem getting filled as long as the spread is fairly close to each other, within 2 to 3%. If the spread is very wide and we have a wide spread, then I gotta think twice. Do I even want to take this trade? Is it gonna be worth it? Sometimes I put my order out somewhere in between, and if I get filled, great, I'm in the trade. But in no way in hell am I gonna market order a wide spread or get in at the ask. And as far as trigger orders go, trigger orders are tricky, because once that trigger hits, it's gonna fill you at the best price, and oftentimes that best price is pretty close to the ask, especially with TD. I'm not sure about Webull and other platforms, I haven't used them, but with triggers, if you put your triggers out and it decides to hit that trigger, then you're gonna get filled almost instantly at the ask, depending on how you set up that trigger. So I usually don't use triggers myself either. What are the key candlesticks patterns to look for? Apart from levels, what moving averages do you use to identify support and resistance? Awesome. So let's get into that. So moving averages I use: 20 EMA, 50 simple moving average and 200 simple moving averages. Okay. Few candles that I pay attention to. Obviously, one of them is the hammer candle. And that hammer candle, if it's coming off in key area of support, even better. If it's coming off, a moving average, even better. For example, this candle right here, back in, March 25th last year, I think it was. Yeah, that little hammer again, very similar to what's going on here. We had that hammer, we closed green, right above that 200 moving average. Very similar idea happening right here, where it did back then. Let me maybe circle it so those viewers can see what's a circle. We have this hammer right here, and we're kind of putting a similar hammer right here. Okay, so these hammer patterns are something that I look forward to. Also, bullish engulfing and bearish engulfing are things that I pay attention to. A lot of the traders on Twitter, they use inside days. And inside days are simply because you have some sort of a directional move the day before, and the day after you have an inside day. And if you guys aren't familiar with what an inside day is, so that's an inside day. You have a move that takes place the day before, right? The high is right here, the low is right here, and the high of the low of today and the low of today take place within the prior day's high. So essentially, it's inside the prior day. That's why it's called an inside day. And oftentimes, this sets up for an explosive move one way or the other, depending on which level is broken. The high is broken, you move upwards, and if the low is broken, you tend to move downwards. And a lot of people on Twitter simply use these levels as their triggers for entries on the long side or the put side. Then you can do it yourself. So if you guys want to talk about inside days right now, I'll give you a few inside days. So we have PLTR. All right, that's an inside day. Why? Let's take a look. Make this candle bigger. So we have yesterday's high, yesterday's low, today's high, today's low. What do we got? We got exactly what I talked about earlier, the inside day, right? Where'd it go? Anyways, yeah, I don't know what I did with that old picture, but that's an inside day. Let's see what else is on this list. XOM, that's an inside day. KMI, inside day. SQ, inside day, right? Inside day hammer, closing slightly below that 200, that 20 moving average. So this one's actually pretty interesting. Hammer and an inside day, something to keep note of, right? 110.60, maybe that triggers, pushes it up nicely, right? Something to keep an eye on there. Oracle, I believe, had earnings today, so that's out of the question. Twitter, another inside day, right? So this is essentially the list they come up with, and they have their trigger points right here and right here. So you can come up with it yourself if you want. That way, you can kind of establish, this is something that's going to work for you. Bearish engulfing, bullish engulfing, those are all things that I kind of look at. I think I sidetracked there a little bit. And 3-bar plays. I don't know if you guys are familiar with what a 3-bar play is. The 3-bar play was, I believe it came up with a gentleman named Jared came up with this pattern. Let me see if I can pull up the candlestick pattern so you guys can see it. Pretty explosive pattern. I've had multiple success trading this. These are all little tricks of the trade you guys are getting here, so I hope you're paying attention.
You got pencil, baby.
Hope you got your notepads out. All right, so here we go. The inside day, sorry, not the inside day, the 3-bar pattern is essentially you have an explosive move one way, right? And the next day is a pullback that doesn't break this high, but is within 50% of that day. It holds within the 50% of that day. And the third day, you take the trigger right off of this resistance, this 2-day resistance level that it forms, and then this explosive move kind of happens and takes place. Okay. Now there's a 3-bar play and there's a 4-bar play, very similar in setup. You have a very clear resistance area in the last 3 days. You have this explosive move that takes place. The pullback is at least 50%, nothing more. If this candle came all the way down here, the 3-bar play, 4-bar play would be invalid. All right, so make sure you're taking note of that. Okay, and also you can do it on. Oh, it's not even drawing on there. Interesting. You can do it on the downside, right? So these are bullish 3-bar plays and these are bearish 3-bar plays. similar move. You have an explosive move to the downside. We have essentially a rest day that's taking place here. And then the next day that breaks that level, you can take it to the downside. Same thing here, 4-bar play, move down, 2 days of rest. At that level breaks, you can take it to the downside. That is another thing that I kind of look at. So can you scan for these? I personally haven't been able to find a specific scan to find 3-bar plays. If you guys have any platform that does scanning, whether it's Benzinga, whether it's your Webull, anything that it is, if you search based on volume, okay, and I'll give you a few things to base your scanner off of. I'm gonna pull this up here, and I'm gonna tell you what to filter for. So average volume, right? 500K plus. All right. Daily volume, 500K plus. Wow, I suck at typing. Relative volume, you want at least over 1. And ATR, you want at least over 0.75. Any broker that you have will give you the ability to screen for stocks. Okay. So you screen for this, and then you come up with a list of 25 stocks. And I'm not kidding when I tell you, every night I go through 13, 14, 15 pages of stocks.
Damn.
And you'll come across every single one of these that I'm talking about. You're gonna find a hammer candle, you're gonna find a 3-bar play, you're gonna find a bullish engulfing, a bearish engulfing. You're gonna have all these things that kind of come together. That's how you build that watch list. That's how you check the flow to confirm which way things are gonna go. And that's how we come up with the levels that we're trading. For example, this would be an X level. If it breaks to the downside, we take it to the downside, and so forth. You just have to really put in the legwork to kind of come up with your plan, right? Essentially, everything needs to have some sort of due diligence and work ethic put behind it. We can't just wake up 10 minutes before market open and expect to make money. There is a lot that you can kind of come up with. And what I mean by that here, I'll show you this little thing here. So, I mean, you can try to find all this stuff here, but you'll go crazy trying to find these. So I found the most ones that are very important and the ones that work very well. All right. Obviously, the bullish engulfing, and then you have the bearish engulfing is the opposite of that, right? And then you have these patterns work as well very well. The shooting star or inverted hammer, and then you have the hammer that we talked about. And those are they're really the ones that I'm paying attention to, and the ones that I mentioned, the inside days, and the 3-bar plays. Other than that, I don't really try to pay attention to the 3 white soldiers, the 3-line strike. All this stuff it's just too much to kind of keep up with. And I always say, keep it simple, guys. KISS.
Keep it simple, stupid.
Yes, for those of you that don't know, Stonerman just said it. Keep it simple, stupid. And stupid is just to remind us that we're always going to be dumber than the market makers. And that's what it is, man. Keep it simple.
This guy. He's posting stuff all day, every day. He does free call-outs and shit on Twitter all day. He's very helpful, answers questions. I can't thank you enough for being here, man. This was a long time coming. Absolutely needed to happen, and I think a lot of people learned a lot from you, man.
No, man, you the man. Thank you guys for always having the back of retail support, man. You guys are awesome. Unusual Whales, love you guys. Stonerman, you the man.
You the man.
W crew, stand up. Love you guys, man.
Love you too, man. All right, guys, we're going to set you off on your way for the rest of the evening. We are going to let Mr.Investr get to his evening. Have a good rest of your day, guys. Thanks again, Investr. We'll catch you dudes tomorrow.
Peace, everybody. Have a good one.